Well, the biggest company on the Nairobi Stock Exchange, Safaricom, has released its full-year results. John Tombleson is the CFO of Safaricom, and he joins us now from Nairobi for a closer look at those numbers. Good morning to you, John. Looking through those numbers that you put at the top of the statements, lots of growth, lots of optimism there, and perhaps one number that stands out is that you've had a record dividend as well, so that'll please the shareholders. Take us through the big picture of these results.
Hi. Yeah, we had a great year. So, as you say, the biggest number was dividend increase of 51%. Makes the Kenya government, Vodafone and our free float shareholders very, very happy. But this was driven by free cash flow, which grew 56%. And that's because of our trading results. Our trading results were driven by a revenue increase of 17% at service revenue lines. And a lot of people tend to think that M-Pesa drives our numbers, but it's just one of the things. M-Pesa grew 22%, voice revenue grew 12%, and most importantly, our data revenue, our mobile data revenue, grew by 41%.
John, before we get a little bit deeper into the numbers, let's have a quick look at your operating environment. Oftentimes it is alleged that you have no competition whatsoever in Kenya. Talk us through some of the things that you have to take on to produce numbers of this nature.
It all comes from investing in the network. So we've really over-invested. Well, not over-invested, it's now the norm. So we want to make sure that our network is the best network in Kenya. That we provide, state-of-the-art 3G speeds. We're ready to do 4G, we're ready to do LTE as soon as spectrum is available for sale from the government. We've been spending a lot of effort over the last 2 years building fibre to our base stations, which is a prerequisite to going to 4G, because 4G radio can be fast, but without a backhaul through fibre, the customers won't experience it. So basically, we think we're doing really well. We just need to now focus on what the government needs us to do for the citizens of Kenya.
John, I wish our cell phone companies could say they've over-invested in the network, because the gadgets that we have can do all sorts of things, but they can't seem to keep a signal with the network. So that sounds very encouraging from a Kenyan point of view. You mentioned M-Pesa not obviously being all of your success, and the number is 18% of total revenue. Now, you've enhanced that particular offering with something called Lipa na M-Pesa. What is that?
Yep. M-Pesa itself is a person-to-person transfer or a person to a business, and it's where the user pays the transaction fees. It's at home. I can pay anyone in the country. Lipa na M-Pesa is more trying to take on the fact that in Kenya, 98% of transactions at a retail end is all by cash. So cards hasn't yet entered the market in any depth. So what we're saying is, why do cards in 10 years? Why not do M-Pesa now at the retail end? So our customers can actually go to a supermarket, they can pay with their phone, it's integrated into the till, and your receipt will pop out in 20 seconds, just like any transaction. At that point, the merchant pays the fee just like it would with a card.
John, Lipa na M-Pesa, you have 122,000 registered merchants at this particular moment. How does that compare with the target that you set out for yourself prior to the launch?
We promised to deliver sign-ups of 100,000 merchants by 31st of March. We did 122,000, but that's just the beginning. Of those 122,000, 24,000 are active every 30 days, actually accepting M-Pesa in their stores. What we said is that this new year we've just entered is changing consumer behaviour, so that when they do go into a store, instead of pulling out cash, they pull out their phone to pay. So we expect FY15, which is the year we're in, to get the active merchants up to the same number as the merchants that we've actually signed up.
It strikes me, John, with what you've just been talking about, and indeed with the phones themselves, which you're taking advantage of, it's as if Kenya is skipping out a couple of the steps along the way. So, for example, in South Africa, we have a big fixed line network historically. Some African countries do not have a big fixed line network, and they're never going to, because they won't need it apparently, or certainly not in many ways. And what you've done here is almost, you've changed the way the telecoms industry works by driving your own products. It's almost not the wrong way round, but it's an unorthodox way round.
Yeah, well, we've got the benefit of watching what's happened in Europe and seeing how we can shortcut things. We've got the benefit of M-Pesa having such a massive uptake in Kenya, so how can we then leverage that? And when you mention fixed line and the copper networks, well, those tend to get stolen. So here I think fibre is what you need to jump to. So in the fixed space, I think there's 170,000 fixed line is actually active in a Kenya population of 43 million people. So the whole Kenya has jumped fixed line. And at this point, we're hoping that people will jump cards and move to Lipino and Peza.
John, 44%, that's the number that makes up your data customers. And you've also just mentioned that you are well on your way towards moving from not only 3G, but entering into the 4G space. Once that spectrum comes on board, how is this going to change the makeup of your revenue stream from where you sit right now?
It takes a while for new products and services to hit the revenue stream. So at the moment, Lipino and Peza, you don't see it on our P&L. It's inside of M-Pesa, but it's not material. When we go to 4G, effectively that's just the same as what mobile data is. It's just faster access, which should mean that we can our customers get a better experience. And it is the way that most of Africa will experience broadband in the home, because if there's no copper for the traditional ADSL, the fibre is going to stay in high density urban areas. So the way to get fast broadband speeds into the home in broader Kenya and indeed Africa is LTE. So, but that's a long, slow burn. It'll take time to get the devices at the right price, us to roll out the network, customers to see the relevance.
John, obviously successful numbers, successful strategy and good prospects given what you've just been saying for expansion. Any concerns from the government side, from the regulatory side about you're too big, too powerful, possibly becoming an effective monopoly and therefore not enough competition in the sector?
I think Kenya's blessed actually. We have the lowest retail pricing in sub-Saharan Africa. So when you say the word monopoly, you generally expect prices to be high, right? So it's not the case here. We've got 3 other competitors, Orange, Bharti, Airtel, all international players who actually keep us on our toes, and it's great. But what we do have is one of the best networks in Africa, as well as the lowest retail pricing in Africa. So that's what I mean by saying the Kenyan consumers are blessed.
One number, John, that certainly does stand out is the dividend that has been recommended. That's an increase of 52%. The question there will always be the sustainability of such a high payout.
Of course, it depends on your net income growth, and our guidance for the new year is, at least for free cash flow, we like to guide on free cash flow, which is an outcome of net income and your capital spend. Our guidance is around 10 to 17% growth in that particular line. So that's compared to a 56% increase in the free cash flow line in the year just gone through. So you do expect, as the numbers get bigger, the percentages to come down.